Okay, folks, we are live, a brand new trading week. Happy Sunday, and thanks for joining in. This is going to be, we have a lot to go over. We have a lot to go over. We're going to be talking a great deal tonight about, of course, the opening futures action, as we always do. Then we're going to talk about the valuation of the market, as we normally do. But we're going to spend a little bit more time on the Fed rate cuts that are coming. They are coming. And the problem that they will most likely create for the equity markets. So stick around. I know that sounds counterintuitive. No, I did not just make a mistake by saying that. I know that cutting rates is supposed to be bullish, but not always. Now, sometimes you'll get what you don't want with a rate cut. So let's begin. Oh, of course, we're going to be going over UNH stock and some chart requests, and I'm sure some other stuff, some good conversation. So let's kick it off. We'll let people filter in here. There's only a few people on. So we have the E-minis that are opening up by 0.1%. Not much happening here, per se. Let's take a peek at the NASDAQ. And I think I should say this. The markets did not have a great close on Friday. The fact that we're not rallying, we're opening flat is not a great shock, to be honest with you. We have the NQ, the NASDAQ 100, up 0.7%. And we spent a good portion of the day on Friday just consolidating after the move lower at the open. So I'm not going to be the least bit surprised to see some strong numbers here overnight. The question is, we may open strong tomorrow. The question is, how do we close? And if we open down tomorrow, well, that's going to be a problem for the markets because we are seeing some chinks in the armor in certain names. Let's take a look at the small caps. Russell 2000 opening up 0.07%. And as is typical for a Sunday evening, not a lot of volume here. Not a tremendous amount of headlines over the weekend. Usually, if you have a very heavy volume Sunday night futures, that means they probably did a data dump, a news dump on a Friday afternoon. And they do that just to try to mute the damage to the markets by Monday, hoping people will forget. So we didn't have any of that this weekend. So this is really no great shock. Let's take a peek at the U.S. dollar. The dollar opening lower here again. This is a gap lower on the dollar. We'll need to watch the 15-minute bar. Many times you'll get a gap lower on, in this case, the dollar. Could be gold, could be whatever. And then you'll get a reversal bar on that first 15-minute candlestick. And if you get follow through to the upside, it actually turns bullish. So while I wouldn't buy this right now, I certainly wouldn't short it. We are leaning into the 2 standard deviation Bollinger Band. I did not want to do that. But what I do want to do is I want to do this. Create an alert. Let's see if we get a 15-minute reversal bar. We're only less than 5 minutes into the new trading week. If we're talking about the dollar, we need to be talking about foreign currencies. The euro has been on a tear of late, gapping up at the open here, 0.07%. We're seeing a light tonight. 0.07% seems to be the number that equities and first 5-minute bars in the books and currencies are opening up around. Next, we want to check in with the Japanese yen. That is opening up not quite 0.07%, but up 0.04%. Now, the yen had a good recovery week last week. It had been weak. It has since recovered. And so I'm predicting that we're going to get higher highs on the yen. Look at this consolidation. Here's your liquidity flush. Now they began to buy it. I think that we're going to press up higher. This is a weekly chart. We're going to press up higher on the Japanese yen. So, you know, when you get the yen looking like this, getting ready for a breakout, the euro, which is clearly in bull market mode. What else do we have here? The pound. The pound, very strong. You know, we're in a bull run here. Stair stepping up higher. We had a breakout last week. This is this week. Aussie dollar opening up strong. We were in a pretty nasty sell-off here. Then we had this reversal week, and now we're putting in higher lows and higher highs. Now you juxtapose the price of these currencies relative to the US dollar. Let's bring that dollar back up. And it's not pretty. It's not pretty. And the problem here, the markets are pricing in interest rate cuts. Not just one, but multiple interest rate cuts. So that's why you're seeing the dollar getting carried out on a stretcher here, and it's going to continue. The problem for the United States with this happening, and it's probably going to get worse, is the fact that you have most of the goods in the United States are manufactured from outside of the United States. So if you're going to buy a good made over in China, wherever you're making it, doesn't matter. If you're buying a good, unless they're going to absorb the currency differential, which is probably not going to happen, your price of that good, it's going to take more dollars to buy those goods. What's that also known as? Inflation. They're going to let inflation run hot. That's what they're going to do. The dollar be damned. They don't care. The dollar weakening for Washington, D.C. is a good thing because it allows them to inflate the debt away. They pay back with cheaper dollars that they took out years and years ago. So this is all good for them. They have no problem with this in Washington. Let's check in with Bitcoin and XRP. Neither had a good week last week. At least not a good Friday. I don't know what they did on the week. Here's Bitcoin. It had a rough week last week. We're opening up at current. This is a bearish reversal bar. I'd want to know if we close above this line in purple here. That would be an indication that we've overcome a lot of overhead supply. Now, I don't know. So I must have made a mistake. Hold on. Above. All right, I have it on above. Good. Okay. XRP, which we just began bull operations on 2 weeks ago now. And I should know the symbol. It is XRP. So a rough week last week. We're not showing a weekly chart for XRP, but if you take a look at a shorter duration time frame, XRP opening up 0.39%. We began buying XRP due to the fact that it has utility. It's one of the cryptos that has utility, and that utility is it's going to help the United States change from the SWIFT system. Maybe they'll still call it the SWIFT system. I have no idea. but the settlement of transactions made in US dollars is going to be like that. Because the Chinese, with the BRIC countries, already have a new payment system in place that makes settlements settle like that. The current SWIFT system, it takes a few days to settle transactions. I mean, that's ancient. So you have Bank of America already on board here, a number of other institutions. So XRP is a long-term hold for us. Let's take a pause here. I want to say hello to folks. All right. Lee Cable, welcome. Mr. Pete, welcome. Talon, hey to you. How'd your gutter installation go? Denny, welcome. Where UNH leads, do you think CNC will fall? Yes. I think that UNH is going to be more stable than CNC because it pays a dividend. It's going to be more attractive for longer term investors. CNC is probably going to be more used more for trading because it doesn't pay a dividend. And that's the exact trade I have on. UNH long-term, CNC we own for a swing trade. We're targeting right now between $35 and $40 per share price target on CNC. Jeff, thank you very, very much. Larry, at 72, Putin, he does. You got to hand it to him. Agreed. Jeff, good evening. I see bearish divergences in RSI, MACD, and SPY for the weekly chart. Yes. Florida says hello. Hey, Scott. Florida says hello. No one is talking about Buffett's other. I am. I have it up. Yeah. So Buffett is buying D.R. Horton and Lennar, and those stocks have recently seen a bounce. Not just on the Buffett news, but and I haven't looked at the home builders. I had no idea that Lennar. I'm kind of pulling my show forward here. But Lennar had lost about 40% of its value from the beginning of the year until only a couple of months ago. So old man Buffett stepped in there, and I say that with all due respect, stepped in there and began buying. TF Hatter, welcome. Yes, thank you for Thank you for hitting the like button. If I could ask you folks, please like, subscribe, hit that notification bell. Please, it helps me out with the YouTube algorithm. Bud in Sydney, maybe. Okay. If industry chatter is anything to go to 27-year-old actress could land a blockbuster endorsement deal. Oh, you're talking about Sydney Sweeney. You looked at 10 million. Are you talking about Budweiser? The company? Wow, so the same thoughts regarding UNH and just yeah. I think it's the wise thing to do. I mean, I don't think that UNH. I think there's more upside to UNH. I just don't think it's going to be a V-shaped recovery. After I think what's going to happen is you got new management coming in, or management changes. The new management is already there. I think they're going to have a kitchen sink quarter. If there's anything left bad to say this coming quarter, they're going to say it then. And then after that, you'll see an upswing. Same thing as they did with Boeing. That's my comp. That's my comparable to what's going on with UNH. Okay, let's move on here. Let's talk about what else do we want to talk about? Let's go to energy. Yeah, let's do energy. Crude oil. Wow, look at the volatility here this evening. Wow. They gapped it down. Oh, this is a new contract. That's why. New contract on crude oil. So that's why you're seeing a tremendous amount of volatility here. So we're opening down over a third of a percentage point. Oil has been very, very weak. There's a lot of product on the market. This is the weekly chart. I mean, here's your downtrend channel. It's clear. It's defined. We're right down at the lows of a trading range. So we have a little bit more to go to the downside. So I do think we're going to make new lower lows here on oil. Taking a look at natural gas, which has been weak of late. It remains weak, down 1.37%. We had a good rally at the back half of last week, but a lot of that has been given back. Let's check in with precious metals. Gold. Gold opening down here. Another new contract on gold. 0.10% to the downside. They're trying to fight back here. Silver down about the same amount. Let's check in with palladium, which we own. I think we're going to see a bottom this week on palladium. We own PALL. And I think that $100 per share market is a nice round number for defense, and that it will probably hold, and we will be adding to our position. PL, platinum, down about 1/3 of a percentage point. So even with the dollar opening down, precious metals are not catching a bid. That leads me to want to take a look at the 10-year yield, which is opening down. Very surprising. I'm surprised it's opening down. Look at this gap up and faded it. I'm surprised there's no bid under precious metals. Let's check in with VIX. Volatility opening down by about 1/3 of a percentage point. That's bullish for equities. Let's check in with agriculture. I want to go to the weekly chart for agriculture, get a vibe for the direction, the macro direction. This is still the VIX. This is wheat opening up. Lots of pressure here on wheat. This is last week. New weekly lower lows. We closed back down into a downtrend channel. So this is a breakout point failure on wheat. Actually, it began back here. This is a false breakout last week. Let's check in with ZS. Soybeans looking really good here. Nice reversal bar. Was this week or this last week? That is last week. So we saw a reversal bar last week. Really bullish stuff. We may do a check back to retest the 21 period EMA, but I think that this is a nice breakout on soybeans. Let's check out corn. Nice reversal week last week. We may head up higher here on corn. Pretty oversold. And we'll leave it off here with live cattle. Live cattle right off of all-time highs. You know, I go through Whole Foods usually every Saturday. And ever since we hit all-time highs a few weeks ago, there hasn't been one single sale on that I've seen. You know, they change it up, but usually on a Saturday, there's at least one sale on at the butcher counter for red meat, beef. Nothing. Usually in the summertime, they have their own hamburgers with onions in them or whatever, plain and whatnot. At the butcher counter, nothing. I think they had it at the beginning of the season. That was it. We went to all-time highs on beef prices, and they raised the price of London broil by $1. That's nearly a 10% increase. How dare they? All they want is money. Profiteers. How dare they? Anyway, so that is the opening futures action. Gold worries me on a monthly. Last few candlesticks are struggling. I wouldn't worry about it too much yet. It's come a long way. A correction is going to happen. So sure, it's going to correct. But there's something that I think is going to happen We'll touch upon that in a little while. That is going to send gold ripping up higher. So let's get to it. Let's talk about the new current week. And folks, if you're looking to join in on the chart request, use the link that I put here in the forum and just enter your symbol. If you're not a member yet of the forum, just please head on over. I'll put the link here. No credit card required. It takes like 2 seconds. 2 seconds. No credit card required. And enter your symbol right in here. Make a comment. Click that button. Enter your symbol, and we'll get to it. Okay. So earnings this week. We have it's starting to slow down, right? We have Palo Alto Networks coming out on Monday afternoon. That's the biggest name in tech on the week. But a lot of it's going to be retail. Home Depot, TJ Maxx, Target, Estee Lauder, a lot of consumer goods. Then we get Walmart. That's the Pimp Mac Daddy of the week, I think, is Walmart. And a lot of Chinese stocks. Intuit reports their stock has recently come under pressure. Zoom, I don't follow that stock. Ross Stores is another retailer. BJ's on Friday. So a lot of retail. Toll Brothers comes out after the bell on Tuesday. These home builders have a problem, and it's called interest rates. We'll talk a bit more about that in a moment. Oh, Analog Devices come out. I missed that. That comes out pre-market on Wednesday. Now, taking a look at the economic data coming out, home builder confidence, that should be interesting. Housing starts, building permits. All right, so building permits are a forward-looking indicator, and it's indicative of the intent of builders to break ground. They don't have to break ground, but if you see building permits dry up, that's a problem. On Wednesday, we get the FOMC minutes. Thursday, initial jobless claims, which have been inching up. We get that every week, inching up every week lately. The Philly Fed's manufacturing survey, S&P Services PMI, Purchasing Managers Index, existing home sales, a lot of home data this week, and U.S. leading economic indicators put out by the Fed, and they're going like this. They're going down. Excuse me. They're going down. Now, we also get this week the added joy of Jackson Hole. So you're going to have all the elites, all the central banksters from around the world heading over to Wyoming. I believe that's where it is, Wyoming. And they're going to be joining in, and they're going to be pontificating about how they're going to pull the strings on this little puppet show that we call life. And it can move the market. Powell will speak. He has spoken in the past. The last time I remember him really moving the market, he was steadfast on not raising rates, and the markets went down a lot. So watch what he has to say. I do not believe that they are not going to cut rates. We'll talk about that more in a minute. I don't want to get too far ahead of ourselves. I want to now segue into valuations, okay? So it's hard to put this into perspective, but charts help. All right, so I try to take a look at the equity markets through the lens of history, because history may not repeat itself, but it certainly does rhyme. So history can be measured by resistance levels, support levels, but also in terms of maximum thresholds at which the markets are going to be able to either continue up higher or continue lower, as measured by valuations. And in the past, when you take a look at the Shiller PE multiple, also known as the CAPE ratio, usually when you get up to these levels here, these are what you call nosebleed levels. The market is priced for perfection. An event happened last week. Not many people want to talk about it. An event happened last week is that we closed at the second highest valuation level on the Shiller PE ratio in history. Prior to that was the dot-com bubble. Now, am I saying that there's no way that this market can't continue up higher? Absolutely not. For all I know, we're going to take out the highs of 2000. What do I know? So while we can sit here and say the market is extremely overvalued, and we would be accurate. There's no denying it. Do you want to go all into the short side quite yet? I would argue you would want to wait until you saw a break in the market. Usually you get a capitulation rally, a blow off top, and then that big ultimate bearish reversal bar on a weekly or monthly time frame. And that signifies that, you know what, we're done here. And the markets begin to sell off. Now, taking a look at the Buffett indicator, we're going to take two views of the Buffett indicator tonight. This is the one we usually talk about. And this one here is the total U.S. stock market value relative to GDP. We are at 200%. So the stock market, the total stock market valuation is twice greater than the entire U.S. economy. How does that look on a historical basis? Well, it means that, again, we're at nosebleed levels, unsustainable levels, and we are coming off. And one of the reasons why we're not even higher right now on this measure is that we had a fairly good earnings season. So, but we remain very, very elevated on a historical basis. You know, back in the 70s, we came close to tapping the upper band in red, this 2 standard deviation move. We hit it once, actually twice, and we were rejected at that level. And in 1969, we went into a major bear market after tapping that resistance level. We then recovered 1982, hit it again in 2000, went into a major bear market, hit it again, and pierced it in 2021, went into a not a horrible bear market, year-long bear market, and here we are again. History repeating itself, or at least rhyming. So that's the total stock market value relative to GDP. But here's a different look. The NASDAQ, just the NASDAQ, market cap relative to US GDP hit a record 105% of the GDP. Think about it. The ratio has nearly doubled since the 2022 bear market and is 40 percentage points above the 2000 dot-com bubble. I tell you, I've lived through bubbles before, but I never thought that we would surpass the 2000 bubble. Never. And we haven't seen the parabolic move up, if we're going to get a parabolic move yet, that we saw in the dot-com bubble. I mean, those last couple of months of that rally were just mind-blowing. Every day, markets moving up 2 or 3%, 2 or 3%, dropping one day, 3 or 4%, up 4 or 5% the next day. It was crazy. It was just absolutely insane. We haven't seen that yet, and maybe we won't. Again, history may not repeat itself, but it tends to rhyme. So when the markets start listing like an overloaded ferry, tilting, groaning, and ignoring the lifeboats, that's your cue to hoist the sails and put out your shorts. Fair enough. I like that. That's pretty good. Moving on. Sticking with the valuation story. The S&P 500 price to book ratio hit a record 5.3 times. The ratio is now officially past the 2000 dot-com bubble peak. To put it into perspective, the long-term average has been 2x. Here you are. Here's the dot-com bubble. Here we are, beyond it now. It's fascinating. More good news. The S&P 100, the triple Qs, or the NDX, The S&P 100 currently has 27% of its total value in stocks having a price to earnings exceeding 50. Look at Palantir. It's the most expensive stock in that index. 66 of the stocks in the S&P 500 has a PE of higher than 30x. And some may be warranted. I mean, to be fair, they're money makers, they're cash machines. There's only one stock with a PE below 10x. Valuations are absolutely crazy, very much so. So here's another way of looking at the internals of the NASDAQ 100, which we currently have a short position here, and we're going to be adding to it when it's right. Right now, it's not right. So again, to repeat, the S&P 500 has 27% of the total stocks with having a price to earnings exceeding 50x. Okay. Then take a look at this chart. Excuse me. I'm losing my voice. This chart here is the NASDAQ 100 stocks, the number of them trading above their 50-day moving average. So think about it. What did we just talk about? Equities are overvalued, crazy stuff. But how does this happen? You have only 48 of the stocks in the NASDAQ 100 trading above their 50-day moving average. How does that happen? What that tells you is that your advances versus decliners there's a gap there. And also the triple Qs are a market cap weighted ETF index, whatever you want to, ETF. Yes, I like to call it an index because it is an index. The triple Qs have a market cap. So you have the market cap weighted. So you have Microsoft, Apple, NVIDIA. They're leading the charge up. When those three stop, those three horsemen of the apocalypse, then everything gets real fast. So watch those names. If you watch nothing else, watch those names. Now, what's the Fed going to do in February? What are they going to do? Well, they're going to cut. Excuse me, February. I just said February. September. I don't know where February. I hate the month of February. It's so cold and dark. So NASDAQ, Fed Watch tool, probability of a cut is actually declined. This dropped below 90%, back above 90, now back down below 90. Very interesting. Let's go out to October, 94% probability of a cut. December. So we have rate cuts being priced in through the new year and into next. I mean, this is really too far out to go. I'm going to pause here at December. A lot can happen here and change. It changes so much. So right now we're looking at cuts, at least 3 cuts, quarter basis point cuts going into the new year. Now, why are they doing it? Why are they going to cut with inflation that's coming out hot? Well, take a look at youth unemployment. It's rising. Youth unemployment reached 17%, the highest since the 2020 crisis, COVID crisis. Think about that. Youth unemployment is now gaining and competing with the 2020 spike up higher here. We're nowhere near the high. I doubt we're ever going to get there. Fingers crossed. But we're in that realm of taking out 20%. And in that area, you want to be very, very concerned because that's where we've seen a lot of problems hit the markets in the past. This is now a level that seen during the great financial crisis, yes, it's highlighted here, and the 2001 recession. So you don't want to see, it's going in the wrong direction. So that's one of the primary reasons why the Federal Reserve is going to lean towards cuts. The other reason, I mentioned I was going to get to this, Lennar. So this is desperation. Home builders court investors as unsold completed new build inventory hits 15-year highs. Now, initially, I thought this was just Florida. It's not. It's nationwide. This is a map of Dallas in front of you. So the prices in Florida are coming down dramatically. They can't even rent houses in Florida at current prices. They got to discount them now. So prices are dropping. People aren't buying homes. And the perception right now by the elites, I like to call them the parasites, is that lower interest rates are going to help the situation. That's not what the market is telling us. And I'll go to my reason why in a moment. Here's a chart of Lennar. Lennar peaked out back here in September and went into a major bear market. I hadn't been watching these names. This was a great short. It lost in excess at one point 50% of its value. Now we have retraced some here, but this to me looks like it's probably going to be a dead cat bounce. Also, container shipping traffic from China to the U.S. is falling again. The number of container ships departing China to the U.S. over the last 15 days has dropped to its lowest level since May. That's when we were talking about extensions on 90 days on the tariff talks. This is also one of the lowest reads in 2 years. Shipping volume has declined by 40% over the last month. Think about that. Shipping volumes have declined by 40% over the last month. This comes despite the ongoing U.S.-China tariff truce, which has extended for another 90 days. Folks, I don't think there's ever going to be a deal with China because they know one thing. And I think this is why you're seeing so much with the redistricting down in Texas. They know one thing. We have midterm elections coming up. So they don't want a trade war blowing up during the midterm election. So I don't think that we're going to see a deal with China before the midterms. And on this point here, I would want to fact check this to make sure it's accurate. In reality, average U.S. tariff rates on Chinese goods still stands at 55%. They're citing Bloomberg. Okay. U.S.-China trade is slowing. Yes. So here's the chart. The trend is clear. It's defined. It's down. Now, here's the conundrum that faces the Federal Reserve. This is off of Yahoo Finance. I've been talking about this for at least weeks, if not months now. The Fed is expected to cut rates. Don't expect mortgage rates to follow. Well, isn't that the reason why? One of the reasons why they want to cut rates? Yeah. The problem is that the Federal Reserve only has control over short-term rates, not the 10-year yield, not the 5-year yield, not the 30-year yield, nothing. There's only one thing they can do to control those yields. We'll go to that in a moment. So let's go back in history. The last time we entered a Fed rate cut regime was back in September, nearly a year now, of 2024. Let's take a look. Let's walk down memory lane to see where long-term yields have gone since September of 2024. Oh, I'm on a weekly chart. Okay, that's why. Here's September of 2024. So the Federal Reserve cuts rates. What does the 30-year bond do? It rallies. We are now (27.5% higher on yields than where we were last September. And the Fed cut by a half basis point the first time, then 2/4 basis point cuts. What's wrong with that picture? So going back here, the Fed is expected to cut rates. Don't expect mortgage rates to follow. Well, we have recent data to prove that that could quite very well be the case. And what did we do last week and the week before, as we got the jobless claims that came out and they revised down the other 2 prior months, we had horrible non-farm payrolls. Longer term yields didn't go down, they went up because they knew the Federal Reserve was going to be forced to cut rates. These are the bond vigilantes saying, no way, we're not buying your bonds. We want more yield. Simple as that. So with that, we've talked about this in the past. We haven't spoken about it in a while, but we have the monthly chart of the yield curve. We haven't spoken about it in a while, at least with non-members, due to the fact that it hasn't done much since here, April. And then we went into a consolidation. We had a horrible July. Is that July? Yeah, July. What do we do this month? We gapped up and we are on the verge of breaking out. So what does this tell us? The bond market is telling us right now, with this breakout on this chart, it's saying that, okay, short-term yields are going to decline. Longer-term bond yields are going to go up. This is why in the past, dot-com bubble, financial crisis, COVID, and whatever you want to call this is why the stock market has traditionally declined. So the Federal Reserve has a heck of a job in front of them managing this boat. And I mentioned earlier that you shouldn't get all too worried about gold if it weakens up here for a while. I would consider it a buying opportunity. Why? Let's go to we talk about this pretty frequently, but it's worth revisiting. So here's what's going to happen. Let's go out max. So here is the financial crisis. This is the Fed's balance sheet. It was $800 billion before the financial crisis. $800 billion. Now, $6,659 billion and change. Why did that happen? It's because the Federal Reserve needed to step in and buy mortgage-backed securities, long-dated maturities, 10-year, 20-year, 30-year mortgages, bonds, to drive down longer-term yields. That's called yield curve control. So that is the way that they're going to get longer-term yields down. It's not healthy. It's terrible to do. It's monetization of debt. The dollar is going to tank like a rock. They know it's coming. These currency traders know it's coming. Bond traders know what's coming. Gold traders, I would hold fast with gold. I think that it's a buying opportunity because when they go this route, when the market begins to sniff out via press conferences, whatever they do to start floating this trial balloon of increasing the balance sheet of the Federal Reserve, buying those treasuries, you're going to see gold skyrocket. Silver is going to skyrocket. Oil is going to skyrocket. The CRB commodity index is going to skyrocket. Bob, they need to keep tightening and get back to QE3, buying more. Yep, yeah, it's exactly what I'm saying. Yep. Maybe they are holding off until they need. I think it's no doubt right now Powell is going to be smoking hopium, not opium, but hopium. He's going to hope. He's going to hope. I don't think he's a bad guy. I really don't think he's a bad guy. I think he means well. He should have rolled off this debt off the balance sheet. He was right to do this. He was right not to increase rates all too aggressively. In fact, I think he stayed too low on rates for way too long. So I don't think he wants to start monetizing the debt and that be his legacy. But folks, note what happens here is that you go once, you get that magnificent rally in equities, but to get the same impact on the economy, The second time around, we had to more than double what we did the first time in terms of buying back treasuries or buying treasuries. This time around, you have the law of diminishing returns. So the market's not going to be satisfied until we take out the highs of 2022. That's what's coming. It's not going to be this year. 2026 is quite possible. And buckle up. Lots of inflation. So I want to talk a little bit about UNH stock. A lot of people are interested in it. And I think I did 4 videos. Actually, no, I did 3 videos on it. I recorded one. It didn't come out right, so I didn't post it. So we've been bullish on UNH since the May bottom. We were watching it. We knew using the algorithm on TrendSpider exactly where the support levels were, which we wanted to buy. And that's exactly what we did. We saw a breakdown. People were panicking, and we stepped in and we began bull operations. The stock rallied, and we sold half of our position just above $300 per share. And we bought back some at lower prices on this pullback because I predicted that's exactly what's going to happen. Now, I say that not to brag, but to point out that a lot of people get their information off of CNBC, and they think guys like me, just newsletter writers, and we're not part of the mainstream, right? And it's not good to listen to us because we're our independence. We're not in the inner circle. We don't have that the inside scoop on what's going on with individual companies, sectors, etc. And to a certain extent, they're right, but that doesn't make us blind to opportunity. Opportunity presents itself most when there's panic, and nobody can control it. No algorithm, no AI has been able to control it. Human emotion, when fear is in place, well, they respond highly impulsively. So that's what you saw with UNH stock, but not everybody saw that. Not everybody saw that, especially not the talking heads over at CNBC. When I saw this, I didn't see this the day it was posted. I just saw it today, and I almost hit the floor. I was in shock at how, and I don't dislike this gentleman, Steve Weiss. I really don't know him. I've seen his face a dozen times, if not more, on CNBC, but he's got to know better. He manages money, other people's money. You should know better. Here, he's on with Wapner. What happened? He's a pretty good question asker, so I like him.
All right, Weiss has some moves. Maybe this first one won't surprise anybody. You sold UNH.
Yeah, as I said, I sold. I had to stop one, so I stopped selling it at 287, and it went 267 rather, and it went straight through.
You defended it numerous times. You bought more on numerous occasions. What finally changed?
Take note: $261.45 as of the time of the interview.
Your mind?
I just think it's going to be dead money. I think the management's doing all the right things. I have a very small position left, not because I wanted to, except because I went through my limit. It's just going to be dead money. It may pop a little bit on the back of Humana's numbers, but overall, I think I can make more money elsewhere. I love what management's doing. I think Hemsley coming back is great. Mm-hmm. John Rex is excellent, CFO/president, but they own the old business still. So until they work their way out of it, they won't be profitable till, increase profitability to next year.
Very quickly, you bought more. Is it FT?
Okay, so that's all I had to say about UNH. I've been highly consistent since May. You got to own the stock. And that was backed up last week by the fact that you had Warren Buffett, David Tepper, Michael Burry, BlackRock, a bunch of other funds coming out and buying up the shares of UNH in Q2. So the question is it too late after last week's rally of 21% to go buying UNH stock? Let's get curious. Let's get curious and answer that question, because I know there's a lot of people that are wondering, was last week's rally a short covering rally? Well, let's check it out. Let's get curious. Let's figure it out. So here we go. Let's begin with the short covering rally question. Was it a short covering rally? The short interest as of July the 31st, so this is pretty recent data on UNH, is 1.69% of the float. That's not a lot. It's very, very little. And that's really not the best way to measure the number of days to cover a short position. The best way to do it is to take a look at the 3-month daily average volume, which is at about 18 million shares per day. And then you take a look at the shares short, which is only 15.23 million shares per day. That's about a day of short covering. Well, the stock was up 21% all throughout last week. That is not a short covering rally. I'm sure the shorts have been hurt quite a bit, and many of them are out now, but that is not the reason why the stock rallied last week. They rallied these names, UNH, CNC, MOH, CI. They rallied them due to the fact that news came out that they were going to be raising rates or taking rate, as that's the insurance nomenclature. So they're going to be raising prices because they're not getting paid by the government as much as they once were. That's not coming back anytime soon. So what are they going to do? They're going to do what they always do. You're not going to get paid by the government. You're going to raise prices on the private sector. They will get paid. We need them. So it's not a short covering rally. Let's get rid of that. Is the stock now expensive? Let's get curious. Let's answer the question. I'm not a subscriber to this, so I can only go back 10 years, but that's enough. PE multiple at or near 10-year lows. Price to book. Remember, the price to book on the total stock market and on the NASDAQ is at ridiculously inflated prices. On UNH stock, price to book is at or near 10-year lows. Price to sales, at or near 10-year lows. Stock's cheap. David Tepper, his basis cost on his tranche of buying, at least that we know of, he may have bought more, and look at that'll get announced next quarter when they file the 13Fs. But his basis cost is $312. The shares of UNH closed out last week at 304.16. Folks, I've been doing this a long time. David Tepper's forgotten more than I'm ever going to know. So if David's basis cost is at 312 and I can get it at 304, I'm going to take that. So I already have a position. I'm not going to buy any more right now. If by chance they manage to drop this lower to fill this gap here that opened up on Friday, I would step in and I would begin to buy. I don't think that's going to happen unless, of course, we get a stock market correction. And maybe it'll do it on its own. I'm no genius by any stretch of the imagination, but I think that the price action that we saw on Friday was a bit of a tell, meaning we gapped up, we held this yellow line here, and I'll go to the weekly chart in a minute to show you the significance of this yellow line in a moment. And I think that we'll probably do a retest of around 297.66. That could quite possibly be the last time you're going to get a two handle on UNH for a long, long time, absent a sell-off in the equity market in general. Now, when you take a look at a weekly chart, the setup here, and this is why, I for the life of me, I don't know why he sold. He may have been overweight. He still says he still owns a small position. He may have gotten overweight and just got shaken out. He was probably leveraged up. It's probably what the situation was. I'm not saying that's what it was. It's probably what it was. It sounds to me he was overweight the position and he got spooked. So the reason why this yellow line here is so significant, remember, that was the low of the day. They gapped it up on Friday and they dropped it back down. And this yellow line here was support, 297.31. Why is that significant? Because we spent several weeks after this bounce trading along that line, and it held again on Friday. So what was support a few weeks ago has now become support yet again. That's a good stuff. So am I bullish on UNH? Yes. I think it's going up a lot higher. Am I bullish on CNC? Yes, but for a different reason. To me, I think that we're going to rally up here. These are the automated trend lines, folks. The value of them. This is where I think we're going. Right now at about 38 bucks a share, but this is declining. Could take a couple of months to get there. But we have a swing trade position here on CNC. Beautiful price action last week. Broke out of this downtrend channel. I think that we're going to have a little bit of resistance here at 30 bucks a share. It's a round number. It was resistance back here once they were finally able to break through it. So I suspect there's going to be some sellers there. Once we get through there, we're going to rally up to around 33 bucks a share, consolidate. If we break through, then we're coming up to this green band here of support. And just to show you, I want to go back to UNH for a moment and show you the value of the automated trend lines. So I flipped these around quite a bit. I forgot which one it was. I don't know why I keep doing that. Enhanced, was it the monthly chart I was looking at? For whatever reason, they're not appearing. Let's do this. Let's do this. Yeah, they're not appearing. There were support levels on the automated trend lines that showed that there was a tremendous amount of support. We bought that dip, and it held. I don't think it was on a daily chart. I wouldn't have been using a daily chart. For whatever reason, it's not appearing here. But there were three support levels. We tapped all three, broke through one, tapped two, and rallied back to recapture support level number one. That's how we knew it was going to be a buy, and we bought in that breach. Here's the candlestick right in here. And in fact, I have support levels right down here, which coincides with the algo. So very bullish on UNH stock. This is an investment. It's paying a dividend, so we're going to get paid to wait. CNC is more of a swing trade. Once we hit our price targets, we're going to be out, and we'll look for the next victim. Let's do some chart requests, and we will call it a night because my voice is going. And by the way, folks, Trendspire to get 35% off using CON35 as your discount code. Use the link below on YouTube, link above on Twitter. And if you do believe that the market is going to come under pressure, I have a diagram. It's free. It's down below that illustrates all the support levels I found on the QQQ, which we are short of. All right, so let's bring up for Sean. Let's go weekly chart first. Lithium. All right, so we're talking about a commodity here. Let's go to a monthly chart first. I always want to go higher. Oh, this is pretty. Sean, me lad. This is pretty. It's beautiful. Adam Jesus, for God's sakes. Beautiful. Oh, she's gorgeous. All right, so we broke out of a massive downtrend channel. We peaked out back here in October of 2021. We broke out here in June. No retest back down to support. Nice rally since then. Let's go to the weekly view. Let's go to the, let's go fibs first. You're going to have resistance up at around 48.13. Let's go to the weekly view. We closed above another Fibonacci retracement level on a weekly time frame. Again, you're going to have a little bit of resistance around between 48 and 49 bucks a share. Look for a retest this week of 45. At worst, you'll get a filling of the gap down at 44. And then I think you proceed up higher. You're going to have some real serious resistance up here at around 52.50 per share. Daily view. All right, so here's Sean. What we did on a daily view is we hit the upper band of this uptrend channel. So just be careful. This is just a guardrail. This is on a daily chart. I look at these upper bands of resistance and I just say, okay, so what all they're doing here is they're establishing the upper band of resistance. So we're probably going to pull back here, consolidate, and this is going to continue to rise with time. So we'll pull back. This line gets higher and higher, and then all of a sudden you take off and you're up and into the high 40s. The same thing holds true if you take your manual trend line. You just do this. There's your lower band of support. You pull back to down here at around 43 bucks a share. You got to be a buyer because the trend is clear, it's defined, it's up. So lithium bullish. AMD. AMD had a huge week last week. Here's the weekly chart. We closed above Fibonacci resistance, but look at the topping tails here. Daily chart. The trend is up. There's not a lot of resistance above immediately anyway. Yeah. So here's something that's interesting. We broke above. These are the automated trend lines, just different iterations of them. You should always play around with these to make sure that you're getting the full view of what could be resistance. We broke out and we captured this resistance level here at around 182 on the 13th, but we failed to hold it, but we did hold a lower support level. So the trend is still intact. I think we could still grind up higher here. Is that it? That's all we have? All right. Save my voice. Good stuff. Michael Anthony. Starboard value. Okay. All right. Folks, I want to thank everybody for being here. Don't forget Transpire to get that discount code. Don't pay full price. 35% off. Link below on YouTube. Link above on X and Facebook. And don't forget, like, subscribe. You know the deal. Leave a comment. I'll definitely get back to you. And everybody have a profitable trading week and enjoy the remainder of your weekend. I'll talk to you soon. Be well.